Okay. Am I audible enough now? Do you hear me?
Yes, sir, we can hear you.
Okay. So this is the first part of linking the numbers given in the financial statements into operations. Um, there is a difference in our financial statement, and because we are not going to analyze financial statements from the tradition by using the traditional tools, and the based on the numbers given in the financial statements as they are. We are going to rearrange them. We are going to rearrange them to bring about some relevant information, or in other words, information in a more meaningful and useful manner to interpret information. And the objective is to analyze and interpret information for decision-making purposes. So therefore, there are lots of limitations if we use the numbers given in the same format in financial statements for our analysis purposes. So this exercise is called reformulation of financial statements. Reformulation. Therefore, there are instances where we can sometimes change the numbers given in the financial statements even due to the outcome of some analysis. Later we will discuss. But now this particular exercise is rearranging all the figures in the format that we want, or in the manner we want. So the clear demarcation here is, in a way, like the guiding principles here are the relevance of and relevance to each activity, whether it is an operating activity, financing activity, or investing activity. So these are the things. So therefore, we rearrange them in such a manner. When a business entity carries out its operations, there could be operating items and non-operating items. Operating items do not necessarily mean that they are key operations such as a revenue or any other thing. As long as a business generates something out of its operation by using its assets and operating liabilities, that is called operating item. This item could be a revenue or an expense. Therefore, in the traditional financial statement, what we have is the revenue. So everyone knows, like, just will show you. Stop sharing 1 minute. I'll just share the screen. Then that would be easy. Do you see this annual report now? Do you see my screen? Hello?
Yes, sir.
Okay. Not the presentation, huh?
Yes, sir.
This annual report you can see.
No, sir.
I have taken for the analysis purposes but if you are interested in any other company, you can tell me. I took ACL Cables. That's a manufacturing organization. The recently available annual report is the for the year ended 31st March 2020. Here in the annual report or the income statement, items are disclosed like this. Revenue from contract with customers, that is according to accounting standard. Cost of goods sold, gross profit and expenses, then operating profit. So this also implies that up to this point, all the items are operating. So these are non-operating, finance income and finance cost. So for our analysis purposes, we do not pay much attention initial stage about these individual items. We categorize them into operating and non-operating or financial items. That is how we do this. Okay. Operating revenue and operating expenses. If you look at this, operating revenue, we look at the company figures, not the group. Operating revenue does not comprise only this 11 million. 11 million or billion, check later. And if it is in thousand, it's 11 billion plus this is another item. Revenue, other income. This is also operating income. Therefore, that has to be added on. These are operating expenses. This is how the things. But in a way, for our reformulation purposes, it is easy, relatively easy. Operating income, operating expenses. Then financial expense, net financial expense minus financial revenue, that is net financial expense. This minus this will give you the earnings. So it is easy. Why? What's the reason for us to separate like this? Reason is this. Earning potential of this is totally different from this, because this is operating income is a result of efforts or commitment of the management employees by utilizing assets that they have. That's what we call operating. But this is either income or expense. Mainly it is net finance expense. It is something beyond your control. You depend on others. Either you have given your money to others on an agreed fixed income. In a case where you have lent your money, you have invested your money, they'll promise you, okay, we'll give you 10% interest, then take it. You can't expect more. By the same way, if you have borrowed money, no matter how much that you have earned out of this borrowed fund, you have to give certain amount, fixed amount. So its characteristic and the contribution to the return on equity is different. In the traditional financial statements, we take everything together and say, this is the return on equity. But in our case, we are going to decompose them into two. That's why we, at the outset, separate it. Now we will move on to the statement of financial position. Statement of financial position again segregate or divide assets and liabilities into operating and financial. I think I told you from objective dimension or the guidelines, actually entities have only assets and liabilities. Entities do not have anything called equity. Equity is the difference between asset and liability. What an entity has are only assets and liabilities. These assets and liabilities are required to be separated into operating and financial. How do you distinguish them? Operating items, no matter whether it is an asset or a liability, is an item that is being controlled by the managers in its process of operation. For example, if there is a building, that building is being used to manufacture goods or store goods. Therefore, that is in your process. Building is being used to rent for others. That asset. If you have some running cash, you can utilize to buy whatever you want and pay for any expenses. Therefore, they are in your operations. Therefore, they are operating assets. Likewise, or contrary to that, there may be some assets which, of course, they are items, but you don't have control of utilizing the impact of that. For example, if you have lent some money to another company, therefore you have a right of getting it back together with the interest. But what are going to be used or what are going to be done by using that money by the other party is up to the other party. As long as you don't have any control over these items, and so I mean that is the simple way of understanding, not the technical way of. From practical point of view, these are the financial items. Likewise, if you have borrowed some funds and you are under obligation, that's called financial items. It is easy to measure financial items or identify financial items. First, you identify operating items. When we have assets, what are the operating assets? The rest would be financial assets. When it comes to liabilities, what are the operating liabilities? Rest will be financial liabilities. Proper term we use is the financial obligations. So this is how the items are interpreted. Now, the total assets can be then separated into operating assets and financial assets. But for further analysis, we do something like this. Even assume that if you want to carry out operations supported by assets worth of 100 million, you need not to have 100 million tied up in your assets, whereas you can get some leverage from outside. Assume that total capacity you required is the 100 million. Therefore, operating assets 100 million. Whereas you have leverage from operating liabilities such as creditors, such as deferred payment, such as some accruals amounting to 20 million. Therefore, 100 million minus 20 million comes to 80 million. So with a net operating asset of 80 million, you maintain a gross capacity of 100 million. That is why we develop this concept, net operating asset, so that we want to check the performance of operating assets and performance of net operating assets. If there is any discrepancy, that is due to operating liability leverage. Later we will discuss. So this exercise is first, we are trying to reformulate, rearrange. Then the financial obligations or the liabilities, FO minus financial assets will tell you net financial obligation. So net operating asset plus net financial obligation will determine common shareholders equity. If you like, you can use the notation of E only, that is equity, or is shareholders equity. If you measure the return on equity, common equity, and return on assets from here to here, this part would be explained by the operating liability leverage. But there will be another part that will be explained by this component, that is the net financial obligation. This is what we call impact of financial leverage. Later we will. So an objective of reformulating these financial statements is to link the return on operating assets, or in a way reconcile return on operating assets with return on equity by highlighting operating liability leverage impact plus financial liability leverage impact. So don't be confused as of now, because when we move to the calculation stage, we may have to pay a little more attention. As of now, simply follow the labeling only. When it comes to the cash flows are also rearranged, but from the cash flows from the operating activities can be taken as cash flows from operations. That is given here. Cash flows for net cash flow from the operating activities is this C, is represented by C. That is what we call net cash flow from operation. From that you have to minus cash investment. So that is the net cash flow from investing activities. Net cash flow from operating activities minus net cash flow from investing activities will tell you something available for financing purposes. That is what we call free cash flow. Free cash flow. Free cash flow means it's up to you for managers, because what is intended to be retained in the business are already disclosed in the cash investment, that is in non-current assets. If there is an excess, if there's a free cash flow, quickly you can go for further investment if you want. If that's the case, you have to revise the cash investment. If not, what you can do, you can distribute that free cash flow as dividends, or you can buy back shares. Nowadays, as Nestle PLC is buying back its own shares, do not know what would happen to the share prices in the future, like whether the company is aiming a delisting, or we do not know, but the company is buying some shares, not all. Or if there is an excess further, you can either lend that money somewhere, rather than keeping that money in the form of cash. Readily available cash in your current account is not a good financial management strategy. Lend them others. It's not investment from accounting or financial statement analysis point of view. If you just go and deposit your money in a fixed deposit, not considered to be an investment. It's just lending. You lend to banks. You lend others. You lend to government by investing in treasury bills. This is lending. Or you can, depending on the situation, balance net free cash flow for plus or minuses, you can borrow. Lending and borrowing together with other interest component, that part is represented by F. So free cash flow finally should be equivalent to distribution for the dealings with shareholders and uh, lenders. That's it. Now, this is mail stuff. I think you better take, yeah. Initially, I thought of getting, yes. Now we can go ahead with, I'm sorry, 1 minute. This is Mail Starkov PLC. I think one of our guys is working to Mail Starkov. Then some insights of the company also can be taken into the analysis. That's why I just took that one. Annual report. This the Mail. No, this is ACL plastic. So I'll take Mail Starkov. Okay, can you access to this annual report? And do the reformulation quickly. So we can take maybe half an hour time, maybe 10 minutes. Quickly do the analysis. First, can you do the reformulation of income statement? Do you see the statement?
So we can see the screen.
Sorry?
We can see the screen, sir.
You don't see the screen?
Yeah. Are you showing a financial statement, sir?
Yeah.
We can see that, sir.
Now?
Now, okay, sir.
Okay, now we are look at the company column and read the items and rearrange these numbers according to the headings I gave you. Operating revenue, operating expenses, and net finance expense and earnings. Need not worry about the other comprehensive income up to profit figure. Okay, just take a few minutes and do it. If you can, so you can download, wait a minute, if I can send you this annual report. So, If I copy this link, will you be able to access? Where is this chat box? Okay. Right. Now I have just I'm sending it. Please download it. Then you have the file with you. Then do the reformatting for income statement, cash flow statement, and balance sheet. So just quickly do it 30 in 10 minutes, and we can discuss. Okay, it was sent. Can you access to it now? Hello? Did you get the file? Just go to the chat box and see the link has been given there, or the file has been uploaded now.
Yes, I got.
Okay, download it. It might take me a couple of minutes. Please let me know whether you could download it or not. Can you access to the file?
Yes, sir. I just downloaded the
Okay,
document.
downloaded. Then everyone, please go to page number, as I remember, 110. Just look at the content page. Directly go to financial statements. Locate the spot income statement, balance sheet, and cash flow statement. Just give me the values quickly. Yes, someone has mentioned that he or she couldn't get. Now, did you access the file or not? Dilani? Hello?
Yes, sir.
Did you get it?
Yes, sir. I get it.
Okay. I'll give you maybe more couple of minutes.
Yes, sir.
Yes, sir, we can see.
So have you done the calculation? What's the situation of income statement? Yeah. Before that, someone is just raising the hand. Dilani? Hello, Dilani?
Hello. Yes, sir. That's
Yeah,
why
you have
for
to raise your hand. Yes, please.
it's for the asking for the link for the
Right. All right. Okay. Thanks. Right. So did you get the numbers like this? In the income statement? Operating revenue should be this much. Is that correct? Can you compare your numbers? It is the summation of summation of revenue, sales revenue, and other income for both. Yes. Is that clear? Or please confirm before proceeding further. Hello.
So can you show them on the document, please?
You mean in the annual report?
Yes. Sir.
Annual report.
Yeah, yeah.
Yeah, annual report. It goes like this. Gross revenue this much, and other operating income this much. Right? Is that the one?
Okay, okay. Thank you.
These two. This plus this should be 7 million something. Yeah, it should be the one. Here you can see in Mailstar. Who is working to Mailstar Co?
Sir, I'm working.
Hmm?
I'm working there.
Who?
Ilakshi.
Ilakshi?
Yeah.
Yeah, can you just tell us a little bit? Like, even I didn't go to the notes. Like, if you go to the note number 8, you will be able to see. Here it is very exceptional situation. Gross revenue is 257 million, whereas other income is coming from maybe from different sources, 7 billion.
Yes,
What are
sir.
they?
Normally.
Huh?
Those other incomes come from our rent income. Actually,
Okay.
We are conglomerate now, so then we have several properties. So mainly we receive from that rent incomes,
Mm.
and also laboratory commissions, and sometimes subsidiary companies dividends. I think
Dividends
dividend
from
from
also, mainly,
subsidiaries.
yeah, even some dividends from subsidiaries
Subsidiary.
also can come. Yes, we'll just
Yeah.
have a look. Wait a minute. Then you can explain a little bit, elaborate more. These are the other income, other operating income. If you just go down in the line, yeah. So mainly dividend, right?
Yeah.
You're right. Dividend income coming from subsidiaries, huge. So the subsidiaries are distilleries or what?
Yeah, mainly distilleries, and there are some more companies
LMF.
also.
LMF is a
Yeah,
LMF
yeah,
subsidiary, right?
yeah,
Most likely, maybe by tomorrow, or maybe within this week, share price of LMF will go up quickly
yeah,
as this announcement of price hike. So significantly, actually, dividends from subsidiary. So if you know that fact, that is more like enough. Now, operating expenses, then operating income. Throughout our analysis, we use these notations. Therefore, operating income, OI means the operating income. Financial expense and financial income, net finance expense or net finance income. Here, net finance income, another unique characteristic. Normally, corporations borrow more and more, and they pay interest. So borrowing is a good thing because you can leverage your operations by borrowing. So borrowing will increase return on equity. We'll see here, it's the opposite. You have lent, whether it has enhanced your return on equity or distracted return on equity because of this situation can be analyzed later under the profitability analysis. But if it will continue with the same set of financial statements throughout our analysis purposes, I think that would be good. Like in case if there are any specific information, if you want, then Ilakshi can elaborate, so she has more insight to the numbers. And earnings, it should be the same. It should be the same, right? Now we will look at the balance sheet. So straight away, numbers would be like this. Operating assets, 68
Excuse
billion.
me, sir.
Yeah.
In previous calculation, when it's come to a calculation of operating income, without getting separately operating revenue and then operating expense and calculating operating income, we can just get that results from operating activities directly. No,
Operating activities directly from where?
results from operating activities the same answer 6,751.
Operating income, yes, like because this
Results
annual
from,
report,
yes,
yeah, discloses that one, right?
no, profit and loss income statement.
Yeah. You can take it, no problem. So, but as a statement, if you like, for example, if you want to analyze, so what is the operating income? If it is given in the income statement, directly trace it from the income statement. There is no harm. Here, what we have done is we have reformulated, represented it. So in the given annual report, revenue, GP, likewise. So here we do not calculate it. But finally, this is that. But if your task is to take the operating income, take it. Because this is straight away directly given, right? Yeah, no problem. Let me check. I think it was there just before the financial expenses. Yes. I think you were asking this. This one, right? Yeah. Finance results.
Yeah.
Yeah, this is the one, right? Yeah, correct. You can take it, no problem. Now we will move on to the balance sheet. Just check whether you have generated the numbers and just confirm whether you got operating assets. Roughly, as of now, lots of things are to be discussed later, but as of now, the information that we have based on the explanation I gave you, these items are operating. How did I get them? 68 comes for the year 2021 financial position. Just go to the company column. Actually, all the items are shown in the under the non-current assets look to be operating. Have a look. Therefore, what I did was I can take this number 94. From that, you have to deduct any financial assets, other non-current financial investments. So this is directly financial asset. Deferred tax is not financial asset. Why? We need to discuss. Deferred tax is an asset which we have the right to claim in future from the Inland Revenue Department as a result of complying with the accounting standard, the tax provision. So it has nothing to do with finance. It's something related to tax. Of course, even someone can argue that tax has nothing to do with operation, even because it is decided by the tax authorities. Yes, but finally, the ultimate tax liability is determined based on your operation. So therefore, it is considered to be operating activity. An investment in equity associated investees. So when it comes to investments in subsidiaries and associate companies and other investments, a question arises as to whether and how we are going to separate them into operating and financial. The rule is this: as long as you have a control or significant influence over that particular asset, it is more desirable and advisable to treat them as operating. So therefore, there is no argument about the investment in subsidiaries. So even though that money is being used by another entity, that particular entity is being controlled by you. Therefore, that is your operating, no matter whether it is an investment. Investment in equity accounted investees means under equity method, investments are accounted under equity method, especially when we have associate companies. So in the case of associate companies, or you can follow the equity accounted method as long as you have a significant influence over that investment. So therefore, there is no harm of taking such assets as operating assets, not financial assets. Right to use assets, operating, biological assets, investment properties, just rent income and all, that is you control your operating asset. Intangible assets, property, plant. So therefore, except this item, rest operating. If you go to current assets, inventories, operating, trade and other receivables, results from operations, they are operating, amounts due from related party companies. This is really further analyzed. We do not know. If you go to note number 36.11, it will tell you, but for the time being, I just put the gross amount as operating. It could comprise operating and financial. We do not know. Therefore, you need to analyze. Here, by looking at the magnitude of the amounts, is 642 million. I didn't separate it. If this amount receivable from your related party as a result of operating transaction, either you have sold goods to them, you have provided some consultancies or any services, amounts are due from your related parties as a result of provision of goods and services by yourself, that is operating. Other than that, if you have provided some funds you have lent some money to your related party and advances given to related party, they should not be a part of operating asset. They have to be separate. But for the like at the beginning, to keep it the simple level, I took it as operating. Other current financial investment. So as the word suggests, the financial investment, just financial assets. You need to deduct it. Other current assets, no. Then the cash and cash equivalent. Again, you need to have a kind of yardstick, a tool to separate. If there is a level, what we call, those who work in banks know this particular term. Is there anyone who works to a bank? I remember, yeah, okay. There is something called running cash. Running cash. Cash required to facilitate the existing level of operation is called running cash. So cash stored in the vault are not part and parcel of running cash. That's the cash stock. So you can apply the same rule here based on the past experience, practice, and all these things. Even you can apply your own judgment. Out of the total cash and cash equivalent balance, you may say, okay, this much may be the average balance is considered to be the considered as operating asset, rest as financial asset. So there could be lots of money maintained in current accounts. If that's the case, it's not operating. So those are the difficult situations where you have to think of when it comes to cash, when it comes to amounts due from related parties and investments. Others are easy. If you go to liabilities, non-current liabilities, here retirement benefits obligations arise as a result of accounting standard. It is part and parcel, connect, like not really integral part of your employees. They are operating. Obligations arise as a part of the engagement, course of actions with employees. Deferred tax, already I just told you here, there is a liability. You know, the deferred tax asset as well as a liability can arise. This is operating. And trade and other payables, operating as a result of your operation. Amount due to related parties has to be separated. But here, on the assumption that they relate to your operation, I have taken as operating. But in the examination or real analysis, you have to separate. Income tax payable, that's operating. Then finally, last item, bank overdraft and other short-term borrowings. Of course, these money bear interest, and out of your so you need to pay a kind of interest. Therefore, they are financial liabilities. That's how it has been rearranged. Before talking about the cash flow statement, I think today we will wind it up at that point. Next week, I want everyone to enter these numbers into an Excel sheet, each and every number as it is, just Excel sheet. Then you can use them whenever you want to do calculations, right? Everyone, okay, otherwise, so you can assign someone to enter these numbers and share. You can share the file with me. Then even I need not to enter. Who is going to be the volunteer to enter these numbers into Excel? Hello? Who will enter? Not the group numbers, company figures. So these balance sheet, better enter that into an Excel sheet as they are. Then reformatting can be easily done, and other analysis also we can do easily. Who is going to be volunteer?
Excuse me, sir.
Yeah.
I can do that.
Yeah. Is that Madhavi?
No, Ilakshi, sir.
Okay.
So I can
Ilakshi,
help
yeah,
her.
please do it and share among, like, that is the sharing, right? So it doesn't, if others also like you can do it by yourself, but no need. If Ilakshi will do it, we can share. Please send the file to me as well. Okay.
Okay, sir.
Are there any other questions?
Excuse me, sir.
Yeah, please.
When it's come to that our individual assignment, we have to do a presentation. No, sir. Last week, you asked us to find a topic to do, and
Yeah. So
so
these are the areas, like if you have your own, can you guys tell me the topic by next week? That would be all right.
okay, sir. Thank you.
And these are the topics I have suggested, but you can think of your own topic if you like, no problem. As long as it links to, I think you have this presentation slide, no? These are the areas. Analysis of corporate information based on financial statements, and so whole list is given there. But better inform me by next week just to avoid the repetition. But now you have the freedom. Otherwise, can I share? Yeah, is that Ilakshi? Who is
Yes, sir.
talking? Yeah, Ilakshi, just can you just share a Google sheet by giving the names? So write down your name.
Okay, sir.
Yeah, just share this Excel sheet with Google Sheet
Okay, sir.
with the group. Then first
Okay,
you can enter your name and your topic, then others know. Then others can fill it up. I can also access. So that would
Okay,
be
sir.
easy.
Okay, sir.
Any other questions? Any other questions? Right. If there are no any other questions, we can wind up the session for today. See you next week. Then we can finalize. And if you have any concern about individual assignments, and we can continue with analyzing the numbers based on reformatted financial statements. Then by next week, everyone please read or redo this calculation and be familiar with reformatting. Thank you very much.
Thank you very much.
Thank you, sir.
Okay, you're welcome. Have a nice weekend.
Thank you, sir.
Bye. Bye. See you next week.